Welcome to Bravisa Temple Tree's weekly market update. This is Ramesh Sigamani. One more month has moved out of 2018 with the stock markets reaching for a newer high. Sensex today at 38,000. Whenever Sensex goes to a high, there are generally group of investors along with the media coming out and saying that valuations have got extended and it is time to book profit. Whereas this time it is different. We don't have media crying foul about valuations, as well as there is euphoric enthusiasm in the investors putting money into the market. What this means is, in the next few months from here, we are going to see the markets going up, and up. What can justify this claim? First, this week we had our GDP numbers coming out, which showed 8.2% growth in the last quarter, which exceeded most of the people's expectations, because at 8.2%, our economy will double in the next 10 years. Along with this, the next news that was positive is eightfold jump in the income tax returns filed. We just closed on August 31st the filing time for the salaried income class, where we have received eightfold jump in filings, and this means huge revenue addition for the country, where government will be spending on development, and all these development will again generate jobs as well as grow the economy. It is also going to bring down the fiscal deficit and thereby bring down the pressure on the currency. So currency will become strong. Now you will be asking, what is this guy saying about a strong currency, when every other day we have been seeing in the newspapers that the INR is hitting lower lows every day. Yes, it is true that the currency has been getting depreciated. It is not only India, across the globe, all the currencies have been getting depreciated. In fact, in this story, there is something good for us. In the last 5 years, the overall depreciation of currencies across the globe, if we take, the country which stood out with the least negative downside was Singapore at 7%. The next country is India, again at 7%. And this shows the strength that Indian currency has among the emerging markets. When currency is strong, investments flow in. As it is, India is the hottest destination for investments across the globe. When money pours into the country, they set up businesses, which again gives jobs and brings money into the economy. All this depreciation in the currency was not because these countries have been going through some problems. It is because the US economy is getting stronger. In spite of all the negative publicity that has been going on against the US President, Mr. Donald Trump, on his policies, it has actually strengthened their economy. All the data that is coming out from this country is being positive, and hence the US dollar is getting stronger and stronger. In fact, Donald Trump has been a good leader, and this kind of growth is what any leader will be expecting. Is Donald Trump going to have a second term? With whatever that is going on in the world today, most likely he will have a second term. When currency depreciates, the dollar goes up, one group of people are in joy. They are the exporters. Software business, where most of their sales is happening through exports, have been the biggest beneficiary in this depreciation that has been happening on our currency. their profits have almost doubled just because of currency depreciation, and this is likely to continue for some more period because there is expectation that INR will hit 73 very soon, and there are even talks that it will go to 76 in some period from now. This being the export side, software stocks are going to go up some more from wherever they are now. The next good news that is there is manufacturing sector growth. Recently, it was published that manufacturing sector has been growing at a higher pace than what it was growing in the last few quarters. This again, when manufacturing increases, it creates employment. So far in the last 2-3 years, we were starving about employment. Now, probably it is coming out. Employment is getting generated. Along with this, one more positive was that many companies have started going for expansion plans. I even met a plant engineer who's a client of mine in L&T. This company has been setting up manufacturing facilities for companies who want to expand and set up factories in India. Not only India, even abroad. He told me that almost all the big names in the tire industry have not only been going to expansion or setting up new plants, they are presently thinking about third phase of expansion, that is setting up a factory now as well as having a plan to set up the third factory now itself. So I asked him, if so many tires have to be manufactured, so many cars have to get applied in India, do we have the roads for so many cars to run? He quoted Henry Ford saying that once when he invented a car and it required a very good road, and media asked him about, is there a road to run this car? He told, cars get manufactured first and roads get done later. Probably this is what we are expecting in our country, infrastructure growth. Maybe this is a small hint that it is going to happen. So the next question, why do we require so many tires? Is there a need for it? Let's look at the numbers. Automobile industry in the last 5 years has grown at 13+%. That means more than 50% of the cars or vehicles that is flying in our country today are recently bought. Suppose say you had bought a car 2013 or 14, now it is time for you to change its tires. Similarly, all the vehicles that were bought in this period will be coming for replacement. Along with this, the new sales that is happening will also require tires. So that means 25% of sales is going to come every year as addition for these companies. Do we see a huge demand? And along with this, the recent numbers published on commercial vehicle sales. When commercial vehicle sales goes up, that gives an indication economy is getting stronger. It was published that CV sales has increased by 54%. Such a big growth would mean so much of opportunity for tires. Every vehicle that is getting rolled out from a manufacturing facility will require tires, and all these vehicles after they are running in the road will require replacement. So there is huge demand foreseen for tires, and that is why mostly all these companies are setting up additional plants here. Probably one can pick up tire stocks like JK Tyre, CF Tyre, MRF kind of stocks which can give very big returns in a short period. When expansion happens, that brings along one more advantage. Companies go to borrow. This increases credit and facilitates banks to do business. Last week we had talked about PSU banks reaching their bottom and are likely to turn around. Probably this gives a visibility of what is going to happen. Whole manufacturing sector going for borrowing. Public sector banks are likely to be the leaders in the market's rally next year because of their cleaning out process, which is almost coming to a close now. Maybe in a quarter or two they will start bouncing back. So you can look at investing into some quality public sector banks which can give very good returns. So this towards the growth, what is the rock star, or which business or which sector is rocking the market now when the market is moving up and up? It is obviously the pharma sector, which has been doing extremely well. In the last 3 months alone, from the bottom, it has picked up 30%. Any sector which turns around from a bottom generally has a 200 to 300% growth. So in that manner, 30% has already got completed. Still, there is a lot of steam left in this sector, and pharma sector also has considerable portion of their sales coming through exports. So currency depreciation is going to benefit them too. Along with this, the natural calamities which happened recently in Kerala and Coorg brought in additional business, that is huge demand for drugs. Though the natural calamity created lot of pain for lot many people, there are groups of people who are going to get benefited because of the disaster. One of my very close friend, Mr. Subramaniam Chandramouli, who is an international sales trainer, told me recently when he was traveling from Dubai to India, his co-passenger was a Keralite, and he was telling him this damage was likely to happen because man had encroached almost all parts of the nature, and bonding between mankind has totally gone. So now we can see, after the devastation has happened, the amount of support, the whole that started flowing from every part of the world, as well as the bonding that has been happening. I don't want to name anything. We can just see by hear by reality that yes, all of them have joined together to help people out. And rebuilding of Kerala and Coorg is going to give another opportunity for companies in the building and construction businesses. This being the growth story, what is in store for the markets in the coming months? Money managers are of the view that markets are going to rally 15% before elections. Of that, 3% is almost done in August alone. And if all the calculations about elections go on right, we are going to expect a repetition of 2014 for the markets. 2014 was a 40 plus percentage gain year. That means 15% from now and 40% if government comes as per expectation. About 55%, 50 plus percentage of return that is clearly available in the next 1.5 years time. For those who are going to invest now, this is going to be a big bonus. Stock markets have always given very good returns. Sensex in the last 40 years have given 16% average return. That is, every year it has been giving its investors 16% growth on their investment. This, if suppose a person is doing a SIP, he is at an even more advantage because they get more number of units allotted when markets are down. For those who have invested into the market in this year from January to August, in the last 8 months where markets went into a correction, now they will be seeing positive growth coming into their portfolios. For SIP investors, they will see even more growth because they got allotted more number of units in the month of March, May and June where markets bottomed out. These additional units which were allotted to them has been helping them get more profits on their investments. In the long run, these more number of units they got when markets keep going down are going to help them reap big rewards on their investments. So if you are a SIP investor, don't think about stopping your SIPs because markets are going down and planning to start again when markets go up. It is not the right way for SIPs. SIPs are actually beneficial when markets go down, and nobody can time the markets. If suppose somebody times the market, generally they are going to be losers, and you will end up telling the world that my mutual fund investments have not worked well. It is purely psychology that retail investors don't make money. Otherwise, markets provide huge opportunity of growth for all sets of investors. It is said that whatever money Indians made from the time of our independence, they are going to double that in the next 7 8 years. This is as per the World Bank calculations that our economy, which is today at $2.35 trillion, will be a $6 trillion economy by 2027. That means 1 lakh invested today into the market will be 2.5 lakhs in the next 8 9 years time. So be invested, participate in this biggest opportunity the globe has provided. Being in India, take advantage of this and become really rich. Thank you. Happy investing.